Looking over the quarter, you had solid revenue, but I think Wall Street was a little taken back by the outlook, a little below consensus. What made you take that cautious stance?
So I think if you look across the guidance, first of all, it is a 20% or so increase, and we recognize that there are some tailwinds, but let's talk first about the headwinds. Things like the discount rate. You know, the long end of the curve really has flattened out. And if you go back just even the middle of December, we were talking about a discount rate that was 30 or 40 basis points higher than where it ended the year. And that has a big impact on operating expense. We called out that it's over $200 million of impact. You know, so you take that and you take then the tailwinds of economic growth, synchronized growth across both the globe and across the country. And we know at the end we'll have a good 2018, but I don't think they took into account what was happening on the pension side. But when you put it all together, it's a strong growth, and 2018 is going to be a continuation of what we did in 2017.
Mm-hmm. What type of optimism have you baked into that outlook regarding the tax reform plan? Many retailers that we've talked to are very optimistic, but how are you thinking about it?
So we actually called out during the call that our tax rate, which has normally been about 35%, is going to go down to somewhere in the 23 to 24%. Mm-hmm. And why we put it in more of a range is because there are some regulations and notices we still expect from the U.S. Treasury, specifically around international provisions, because the new law really changed that area. But overall, we expect somewhere between 80 and 85 cents of our increase of $1.20 to really come out of the tax reform. And we called that out on the call this morning. So, you know, you can think of the earnings growth as 1/3 underlying growth despite the headwind of discount rates, and 2/3 because of the benefits of the tax.
You know, I connected with our reporter Anders Kite. She was on your earnings call, and she mentioned that $125 million in costs related to peak shipping during the holidays. Can you ever get out? Do you envision you're going to get out in front of some of these costs, or is this just the new cost of doing business in this e-commerce type of world?
Well, Brian, 2018 is really a pivotal year for us on two fronts. First, we're opening up about 18 new facilities, and some of these are massive million square feet buildings that are really going to be key to the growth. If you look the last 3 years, each year our volume levels have sequentially grown faster from a growth rate standpoint. So this is going to be very important. And then second, we start implementing some of the technology that really is the power of the smart global logistics network. Things like Smart Trailer, Orion 3.0, we start beta in the second half of the year. You put all that together, and we know that as we do those things, the leverage will come. But this year, our biggest challenge, but opportunity, was that the growth around cyber was almost 20%. In fact, for the whole peak period, the National Federation of Retailers had predicted somewhere around 3.6 to 4% growth. The actual came up 45% higher at 5.5%. And what we saw was not only the big customers, but every customer, small, medium, and large customers, actually saw a bump up in demand. Mm-hmm. And so that's a good problem to have. We do plan to get in front of it, and there were some challenges. And part of those challenges were also inflationary around purchase transportation and temporary hires as the labor pool or unemployment stays muted.
You know, seeing as there's a lot of costs coming into the system here, not just for you, for a lot of different players, do you envision acquisitions helping that? Does UPS have to make acquisitions to get even bigger? And I ask that because since the last time we talked, we heard some rumors of Home Depot looking at a last mile play in XPO logistics. I mean, do you want to get bigger? Are those targets out there?
You know, we're always looking at where is the right place to invest from an acquisition standpoint and where is the right place to invest really more internally. And obviously internally, we get the best return because our return on invested capital is in the mid-20s. That being said, we also made 4 little acquisitions over the last year. Mm-hmm. We're up to about 15 or 16 that we've done in the last few years, and they're all pocketed acquisitions that help to run different businesses better. Included in that is the Coyote acquisition, which is a truckload brokerage. And that's great for our customer base, but also helps us internally during these high peak season periods as well. We're always looking for what new capability or geography, and we'll continue to do that.
So does that big play exist out there, that big acquisition, or is it more of a regional type of play and consolidating from that aspect?
Well, I think when you look at UPS, we're such a broad, large organization. It's really about capabilities, whether they be physical or software. And you look in our past, we've done some acquisitions that way. But it's really about capabilities and geography. And there isn't one target that we look at. We look at a broad base and determine based on a strategy the direction we want to go.
Sure. Lastly, I can't think of another company that has a greater snapshot or insight into inflation. What are you seeing on that front? Obviously, oil prices have ticked up. What are you seeing there?
Well, I think it's interesting because if you look, in 2017, we obviously know that there was very little inflationary pressure. Going forward, based on where 2017 was and the growth rates that we're starting to see in the economy, both from tax reform as well as that the global synchronized economy seems to be more aligned, you would expect that you would see something return closer to more normal. But that being said, today my discount rate is directly related to how inflation's looked and what long-term bonds look like. And we know since the first of the year, those have gone up, but through 17 they had not.
Oh, welcome to the ball game, new Federal Reserve Chief Jerome Powell. Richard Peretz, thank you so much for joining us.
Thank you.